Alright, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. I have a very different video for you guys this morning, and I think this is an important video, so I hope you guys stick around to take a look. A bunch of key data points just came out this week. In addition to that, a bunch of key earnings came out over the last week, so I want to talk about all those things because I feel like maybe, speaking for myself, and I think a lot of other people, we may be too far into the forest to see the trees, and all might not be as it seems. So I want to be clear, to extend my analogy, I don't think we're out of the woods yet. I think 2023 is going to be a choppy year, but I don't want to talk about the emotion of what we all think. I just want to look at some data points and see where we're really at and maybe take a fresh look at what's going on in the market. So if you're new to the channel, please remember to subscribe and hit the notification bell. If everybody could please smash the like button, I would appreciate it. Lastly, if you want to become a member, you can join the channel by hitting the join button on the YouTube page. It's right next to the subscribe button. If you don't see a join button, then there should be a link below in the description. Membership comes with a lot of perks. Membership is growing. The members get a lot of cool stuff. We do a live stream for members only every Tuesday after the market closes. There's about 20 plus videos that are for members only right now that are deep dives I've done on companies that the members have chosen. So every Tuesday on the live stream, the members get to choose a company for me to do a deep dive on. So we have a lot of fun there. We would love to have you join us and support the channel. Okay, so I'm just going to start with the cover of Yahoo Finance right now. And you'll see there's a big giant picture of a bear. The 2023 rally bears an eerie resemblance to last summer's head fake. So this is kind of the narrative. Even though things have been going well, we're in a little bit of a rally. The gloom and doom factor has been extremely high for a very long time, and I can understand why, because last year was not good. 2022 was brutal. I hold a lot of small cap, high growth stocks, and all of those got just taken out relentlessly. So now we're looking at 2023, and at the beginning of this year, you know, everybody does their planning. It's a brand new year. Now, the year has started off very well so far in a lot of ways, but the skepticism is still there, and I think we're right to be skeptical, but I do think we should also be following along, watching the data points and see if maybe we haven't turned a corner. Because some of the data points that are coming out are better than expected, and they're painting a different story than this absolute gloom and doom scenario that people have for 2023, as we're certainly still suffering with high inflation and a lot of other issues in the economy that are making life difficult. There are a lot of things going on, and I'm not dismissing any of those things. What I want to try to do is figure out, what's the market doing? I'll start out by showing you this. This is a CNBC headline from December 30th. Stocks fall to end Wall Street's worst year since 2008. 2022 brought the pain. The worst year in 15 years is saying something. So there were a lot of metrics like this where, you know, this was the worst year in 15 years. This was the worst, you know, inflation numbers in 40 years. 2022 had a lot of very, very bad talking points. And we all lived it, and we know that 2022 was a very difficult year. So we're in 2023. We're still obviously only in January, but that's why I want to talk about this. We've got the rest of the year ahead of us. Certain things have started running a little bit in 2023. We're having a little bit of a relief rally. People are extremely skeptical, but I want to look at some of the data points. So let's get to the data point. One key data point just came out a few days ago. Okay, so this is GDP. This used to be the number one most important thing that we looked at. That has been passed by inflation and the Fed, what the Fed is doing with interest rates. That has dictated what the market is doing for the last year plus, and I think it will continue to dictate here in 2023. But I want to look beyond that and just take a look. You know, GDP just came out, and if we look at this, the first two quarters of 2022, we had negative GDP. We were down 1.6% in the first quarter. We were down 0.6% in the second quarter. So two consecutive quarters of a reduction in GDP fits the technical definition for a recession. However, jobs were still very strong. So, you know, the jury was out on whether or not this was actually a recession. Has the recession yet to come? But if you look at what has happened since then, we now have two more quarters that have been reported. The third quarter of 2022, GDP was at 3.2%. That's actually a fairly healthy number. GDP for the fourth quarter of 2022 was at 2.9%. The consensus was that GDP was going to be at 2.6% for the fourth quarter. Well, we beat that handily at 2.9%. In the previous quarter, they were estimating 2.9%, and it turned out to be 3.2%. So this is back-to-back quarters of decent GDP growth and beating our estimated number by a lot. In the past, those would have been big market movers, but the market is fixated, rightfully so, on inflation because inflation did spiral to a point that was very bad in 2022. There are a lot of people expecting a giant reversal in this, and we're going to have some negative GDP in 2023, so I guess time will tell. All I can tell you is the last two times we beat the consensus estimate, and it was better than we expected. What really got me thinking was yesterday American Express announced their earnings, and basically their CEO said, and I quote, and this is a headline from Yahoo Finance, American Express CEO, we aren't seeing recessionary signals. There's three companies that I think are huge indicators of how the economy is going, and they are Visa, MasterCard, and American Express, right? That is how we transact business. That is how the retail consumer transacts business. American Express came right out and said, we're not seeing recessionary signals. Well, if I go to Visa, and Visa is the largest one out of all of these, Visa is one of the largest companies in the US by market cap. Visa beat on the top line and the bottom line. So while everybody was thinking things were getting worse, Visa had a quarter that was just fine. So if I go over to MasterCard, which is also a behemoth company, MasterCard's Q4 earnings beat on resilient spending. So there's MasterCard beating. So we've got Visa beating, we've got MasterCard beating, we've got American Express saying we're not really seeing any signs of a recession. Okay, so let's talk about the big one, inflation. Inflation, the CPI data, and the Federal Reserve have absolutely dominated the market's movement in the last 15 months. And this chart will show you why. The CPI data peaked in June of 2022 at 9.1%. So that is a very, very high number. For those of you watching around the world, it wasn't just here in the United States. These are the US numbers, but most of Europe mirrored this, and the world was basically in a similar place. Inflation was on the rise, and 2022 was a tough year pretty much all the way around the globe. But you can see from there, we have 6 months in a row where the CPI data has gone down. So obviously that's a good thing. They are expected to raise rates again next week. The market is starting to price in that the Fed is just about done raising rates. So despite their tough talk and the fact that they've said they're really not even going to consider lowering rates in 2023, the market doesn't believe that, and the market's starting to price in we're going to stop raising rates sometime in the first or second quarter of 2022, and sometime in the third or fourth quarter, they believe the Fed's going to start lowering interest rates. Here's another number that came out. People were extremely worried. Everybody's waiting for the destruction of the housing market, and that's the next shoe to drop, and that's going to be a disaster. And it's too soon to tell. Maybe that is ahead. One thing is real estate is very local. So wherever you are, you may be experiencing a boom or a bust as we speak. But from a big picture standpoint, this was new home sales in the United States. So this came in at 616,000 for the month of December. That was up from the month of November, and November was up from October, and October was up from where we hit our lows in September. So this is 4 months in a row where this number has gone up. If you look at expectation, we were expecting 617,000. We got 616,000. So that is within the margin of error. Basically, we were right on expectations. Again, I don't want to say that we're out of the woods. There's a lot of data points we need to continue to move in this direction before we can have any confirmation that we're out of a bear market and before we even start talking about a potential bull market. But what I have been saying is I think we're going to have a lot of sideways activity. I think we're going to have a lot of volatility. I think we're going to have a lot of rallies in 2022, and that's going to go in both directions. So, as we rally up, we're going to have pullbacks. So lastly, I want to say the DXY, which follows the dollar versus other foreign currencies around the world, that had spiraled out of control. Part of our problem in 2022 was, in addition to all the bad data points surrounding inflation, the dollar was at a 20-year high versus a lot of other currencies. That was putting a lot of pressure on the stock market. So we're starting to see that move in the right direction. If that were to continue, and that does not have to go down drastically, if it can just stay, it's at 101 right now. If it can get down into the high 90s, that probably bodes very well for the stock market. So just to conclude, this was a lot of data I wanted to throw at you, and obviously I don't know what's going to happen going forward, and really nobody knows. And that's my point, is that, while you're listening to a lot of the gloom and doom, bear in mind that some of the numbers aren't necessarily playing out that way, and we need to wait and see where 2023 is going to go. Because again, oftentimes the stock market will be ahead of the economy. We may have certain segments of the stock market, some of the larger cap stuff that did not get hit as hard in 2022. Maybe that's not at the end of its downward cycle, but some of the small cap high growth and some other sectors and some other industries may start to recover this year. We're seeing that in January. The question is this just a relief rally, or, are we moving into a situation where we're going to start getting healthy? So I don't know what the answer to that is, but I do think it's a very valuable question. We have to keep a close eye on this as we go throughout the year so that we don't have a misdirection. We don't want to be preparing for a recession when the stock market has already priced it in. And that would be my big fear in 2023. So again, this is not financial advice. You guys got to do your own due diligence and figure out what you think is going on, but all doesn't seem to be exactly as they're saying. So let's keep our eye on the ball. Best of luck investing in 2023, and I will see you in the next video.